Hi everyone, Mary Wisniewski here, editor-at-large at Cornerstone Advisors and host of Money Isn't Everything. And this episode is actually going to be the last episode for the year, and it's a very fitting episode. I started the show by interviewing Ethan Block, who founded Digit, one of the first, if not first, automated savings apps. And now I'm closing it with someone who worked with Digit and helped educate me about financial health when I was reporting at American Banker. So in today's show, I'm so happy to tell you I'm speaking with Jennifer Tescher, who is the president and CEO of the Financial Health Network, which, among many things, shines light on financial struggles and disparities. She also founded it in 2004, so this year marks the 20th anniversary of the Financial Health Network. And we get into all of the hot topics, including how banks are in the business of financial health, whether they know it or not, open banking, and AI. We also recorded this episode a little bit early and actually had this conversation right after the presidential election. And Jennifer weighs in on what it means for, or what it says rather, about financial health. Here's our conversation. Jennifer, it's great to have you on Money Isn't Everything. Welcome to the show. Thanks for being on today.
Thanks for having me, Mary. It's so nice to reconnect with you. It's been a while.
It's been a long while. And I was just thinking back to, it must have been American Banker reporter days, because I know you were my go-to source for let's talk about financial stability and, income volatility. And so what a treat to be able to reconnect with you.
Yeah, well, and I'm thrilled about this podcast that you've put together because it touches on so many of the issues and themes that I really care about. So I've been an avid listener, so I'm glad to be here.
Well, thank you. So hopefully we'll keep that up. But I wanted to set the stage because, there are a lot of more of the innovator types or digital banker leaders listening to the podcast. But, for more of the traditional bank or credit union executive that may be on the line, I thought it would be great to open the stage of I've heard you say that, banks or, credit unions are in the financial health business, whether they know it or not. And I thought, oh, let's start there. Let's unpack that a little bit. What do you mean by that?
I love that. Thank you for starting there.
Yeah.
So what I mean by that is what bank and credit union customers and fintech customers, for that matter, want is they want someone to help them improve their financial lives, to have their back when they're struggling, to be there to provide both product and advice when they're thinking about how they might be able to get ahead, and to be able to count on them for the day-to-day needs that they have in managing their cash flow. And too often, financial institutions they see themselves as being in the product business. Mm-hmm. In fact, they're organized often around products. There's a group that manages the checking accounts and a group that manages the savings accounts, and et cetera, et cetera. But that's not how people live their lives. And to suggest that all they're doing is selling products really puts them in the commodity business. No one wants to be in the commodity business. It's not a highly profitable, not a high margin business.
No.
The products are simply a means to an end. And I believe that financial institutions need to care about the end in order to best serve their customers and to make money doing it.
And I'm curious, just because this has been your line of work for a while now. And so I'm curious, this would probably be more anecdotal, but do you see a pendulum moving in the right direction of the industry's embrace or opposite of embrace of, engaging in this line of thinking? Yeah.
Yeah. I have to say this year marks the 20th anniversary of the Financial Health Network. So I founded the organization 20 years ago.
Yeah.
Thank you. It was originally called the Center for Financial Services Innovation. And 20 years ago, we were founded to really think about how the power of the internet could include way more people in the financial system that had been included to date. We were really focused on inclusion and access. But it was, the invention of the smartphone and the financial crisis and the Great Recession, which ultimately led us to this need to focus not on getting in or the product that you might use once you get in, but like what you're aiming for, what you're hoping to accomplish by engaging with a financial institution. We decided to call that financial health, and we've spent the last 10 or 12 years now defining it, creating a framework and measurement methodology around it, and really working with financial services companies of all kinds to help them sort of understand the big idea,
Mm-hmm.
understand how their customers are faring and how their workers are faring, understanding how the country as a whole is faring, and then understand what actions they could take. What could they do differently if they actually wanted to have a positive impact? And I'm thrilled to say that we have seen huge change over time. We're seeing new norms in just this is just how business is done. So there are dozens and dozens of people who have financial health in their titles at these institutions. Many of
Yeah.
these institutions have cross departmental working groups who are thinking about financial health across the life cycle of the customer. And in some ways, maybe the most exciting development that really demonstrates how far we've come is the OCC's announcement earlier this year of vital signs, in which it really called on banks to start measuring a handful of indicators of consumer financial health, their vital signs, using their own administrative and transaction data so that banks can actually make good decisions based on how their customers are faring. And so we're incredibly excited about just how much adoption there's been, and there's still more work to do.
There's always more work to do, it seems, but this has been such a big year, all kinds of news breaking. And, the most recent one being who the next president is. And I wondered, just a lightweight question for you, in this new political environment that we'll be in, what do you think it might mean, or what should the industry pay attention to as it ties to financial health so intimately?
Yeah, I appreciate the question. Just for context for listeners, we're recording this on the day after Election Day. So
Feelings are raw.
it's all,
Hmm.
well, and frankly, I think we're all still assessing. We barely even understand what the exit polls said yet. So I think there's a lot more reflecting that all of us will need to do. And we'll have to see who wins the House and, how all of that shakes out in Congress. But I think for me today, just my raw reflection, it's that it has never been more clear of the connection between a healthy democracy and the financial health of that democracy's citizens. Because at the end of the day, too many people in this country feel like they have been left out or left behind in one way, shape, or form or another. And in those moments, people ultimately turn to a populist, turn to someone who can make them feel like they're heard and seen.
Hmm.
And in many ways, it reminds me of remember Zuccotti Park
Oh,
during the
yes.
Great Recession in the wake
Yes.
of the financial crisis.
Yes.
Like in many ways, today is the ultimate reckoning. Now, that's not the only cause. It's not like the financial crisis was the single precipitator that led us to this moment. But I
Hmm.
think it's emblematic of what happened. Right, the view of Americans that banks were let off the hook and no executives went to jail, and yet millions of people lost equity, lost their homes. And I feel like it's useful to remember that in this moment, because I think for many voters, the expense of their rent or their inability to even find a place to live, the cost of healthcare, the cost of higher education, the cost of eggs and milk, even though inflation is down, I think those are all things that really drove people to their breaking point. And here we are. So I think it means that we need to double down on this work of making sure that both the nation's policies, but also the policies and practices of the institutions serving American people really need to be focused on helping shore up their financial health.
Gosh, I really hope that is that will be the broader takeaway for lots of banks and credit unions, because that would be great. And actually, I remember walking by like Occupy Wall Street, and it was actually I was walking from my job at American Banker to my apartment, and that was the walk home. So being a little bit of deja vu there. Well, here's something that could be considered more hopeful or more concrete or not concrete, because it is actually very controversial still, which is, open banking and the rules that were set. I mean, I feel like I'm sure we've had interviews about this from years and years ago of like, what's wrong with screen scraping and, what's this little thing buried in the Dodd-Frank called 1033. And, now we're in a different moment. And of course, there's all kinds of spats around it. But I am curious your takeaway of its potential and also maybe what you would think that still needs a little tweak here and there to actually realize the potential.
So exactly what's going to happen, I don't think any of us knows. Not just because of the change in president and Congress, but because there's a lawsuit that's been filed and we don't even know whether there's going to be an injunction, whether this thing's going to move forward while the case plays out. So I think there's a lot of uncertainty right now. But on the positive side, I think open banking is an incredibly powerful tool, I'll call it a tool, to really empower consumers and put them in the driver's seat in a way that they really have never been before. And it's why 8 years ago, we published the very first set of principles on what high quality, safe, and effective consumer data sharing should look like. And that led to the CFPB's creating its own principles, which ultimately led us to this point. And so this is something that we've had a stake in now for quite some time. If you think about it, asking consumers to really focus in on managing their financial lives, but not being able to access easily and safely their own data from across their financial relationships in order to best do that is like tying one hand behind their back. And so I think just the sheer democratization of access to one's own data is huge. But then I think it's going to unleash creative juices. And not just by fintechs. I'm hoping banks and credit unions will also recognize the opportunity here to help make sense of that information for their customers in ways that add value for them, as opposed to just more ways to sell more stuff. And so, but I do think that whether it's making it easier for consumers to switch banks or switch their deposit accounts, to being able to understand their usage patterns and then see which competing products at other institutions might actually be a better fit or a better deal for them. I think the possibilities are endless, and
Yeah.
God willing, this thing becomes a real rule. I'll be thrilled.
Yeah. I'm especially curious of like that ability, that added transparency to see, maybe like better see like the fees or the rates, or just be able to compare in a more thoughtful, accurate way. Because, of course, like in some ways you can grab the data, you're doing it. I always heard someone compare this to like, oh, here are the keys to my car, perfect stranger, when I'm, giving my bank username and password to use something like Venmo, for example. But of course, not reliable, it's not safe, and there's all kind of issues. So I guess, from the fintech startups that you work with, do you already see like any like tangible example of something they're thinking about that, if they have this more reliable data, then they can do this, and it's way more interesting than, let's say, the mints of yesteryears?
Yeah. Well, I'm thinking in particular about Credit Karma. I can't really call them a startup anymore, can I? Right? Owned by Intuit,
No.
almost 20
I know.
years on now.
But doesn't
right?
it feel like it? It feels like it. I remember that the CEO at my desk, like showing me, side by side, showing me the product.
Exactly.
Mm-hmm.
And, Intuit a few years ago made a huge bet on Gen AI across the company.
Mm-hmm.
And now every single one of the products that Intuit sells is experimenting with or has a couple of AI use cases. So Credit Karma is one of those. And I think that in that case, the ability for the consumer to say, um, how can I go about borrowing $500? Instead of saying, which is the best credit card for me, right? But instead,
Mm-hmm.
taking a step back and enabling people to understand the various options that they might have. Like, that's a really cool. It doesn't seem like rocket science, but like that's really helpful. Again, it's not taking the product point of view; it's taking the
Mm-hmm.
end goal point of view and starting from there. And I think that we've just finished doing a little sprint trying to understand what's going on in the landscape, and a couple of other thoughts that of things that we've seen, less about like what are the actual use cases, but more of some like key takeaways.
Sure.
Um, Advice isn't enough. Like, AI can put information in front of you. Maybe it can even make better sense of it. But the power of AI is going to be in helping consumers actually take action.
Mm-hmm.
Because if you don't ultimately drive action, then tree falls in woods. So, and I think that's harder to do.
Yeah.
But I think it's important.
Yeah. Well, let's get more into this because I was just at this event that was focused on AI, and multiple people kept bringing up like the limitation right now with large language models. It's not so great at math, for example. So, like, of course, when I first started hearing about ChatGPT a while back, I was like, oh, think about what it could do for like your money and answering questions. But like, we're not there yet. Seems like it'd be in the distance. But how are you thinking about it in terms of its like limitations with math right now and what it might be in the future? Then, for like helping people with their taking action, as you say, for their money decisions.
It's interesting. Like, I have heard this sort of it can't do math well, but when I think about the kind of uh, insights and optimization that AI
Mm-hmm.
could be good at, I'm not sure the math part is going to be so critical.
Mm-hmm.
Certainly nothing particularly complex. We're not asking it to do algebra or calculus for the purposes of helping people
I
manage
might
their
be
money,
Jennifer.
right?
Yeah.
Um, but when think about this. Think about I'm living paycheck to paycheck. My cash inflows are uncertain. They're not standard because I'm working a
Mm-hmm.
gig job on the side, and I'm trying to figure out when to pay which bills, in what order to
Mm-hmm.
pay them, and when during the month. A computer is in much better position to figure that out than I am. And the generative part is only that it can then communicate that to you in a natural language way.
Mm-hmm.
So that's the kind of thing. That feels like a relatively small thing. Um, that's the kind of thing that could really take the bandwidth thinking time that people are spending worrying and stressing over this. Imagine if you could have your computer do that for you, or at least suggest it for you and let you review it before you say, okay, do that for me. Just how freeing that could be.
And I'm curious how you think about this too, because I'm, empathy and just like not losing patience. Because I've had a few chats with my bankers over the years, and I would say some of those interactions weren't so great for my self esteem when I was young. And like, they're like, "So what are you doing?" When I was, took an internship at a men's humor magazine called Cracked. I remember this vividly because I was in a branch, and they're like, I was like
Ay, ay, ay.
young and feeling embarrassed. And, now I'm just like, well, that's really annoying. But I do think there's this potential of like, removing, that fear of shame if you're talking to, you know, a non human. I think that could be like removing a barrier for someone who's avoiding this scenario because they're afraid of like getting negative feedback or judgment. But I'm curious, do you see it in this way? Do you see it in a different way?
I love that idea around empathy. And it's so counterintuitive because at the end of the day, it's a computer.
Right.
It's not a human.
Yes.
And all
Yes.
I mean, but think about the movie Her, right? Like it can very much feel like, and that's both good and bad. So it could be good because no judgment, won't lose patience. But on the other hand, it can also create trust where maybe there shouldn't be, right? Where we have to remember that they're not really in charge. And if they are, we have a problem. But I do agree completely that money is emotional. In fact, I loved that episode you did on what
Financial
was it?
therapy?
Financial therapy. That's it.
Yeah.
Yes, because we like to think, we sometimes design products and experiences and advice as if it's just black and white, A, B, and C. Do these three things. But not only are people's lives complicated, there's huge emotion, and we really have to embrace that idea if we're going to be successful in engaging with our customers. It would be a little like a doctor not recognizing the emotional content of the health decisions we make. And bedside, they teach whole classes in bedside manner. Where's the bedside manner class for bankers?
Oh my gosh, I want to teach it. I'm not qualified, but I could be like, oh, just, thank you.
You have a very sunny personality. You'd be perfect at it.
Thank you. Well, I'm just, because, we're people who go to these conferences, and I'm sure you get, commentary like this. I certainly do. I'm like, well, I didn't think I invited this in, but it would be like, at the worst extreme was when I was covering debt collectors and they were calling people in debt financial terrorists, which is just like, oh, are you not like thinking about, the person who just got cancer or just had this huge medical thing or just their parent died and they're like providing for more money or, the list goes on and on.
I think the terrorist is the bill collector who's calling 20 times a day, despite laws against it.
Yes, we share this. But
yes.
Yeah, it's just like there seems to be this bizarre, like, this is the bad guy, this is the good woman, blah, blah, blah. So I think if there was a way, and I don't even know how this would play out, but I am really fascinated by like how mental health and fintech and money things can all sort of like intertwine a bit more to hopefully address the real things. Because as we both are aware, like, yeah, the budgeting tools that doesn't really do much for people. It needs to evolve into the action, but it also needs to relate to reality, to someone's reality.
Completely. And it's been really interesting to see a growing number of companies for their own employees embrace a broader focus on all kinds of wellness, but especially mental wellness, mental health, self-care. And they are tying that in often with physical wellness, financial wellness, et cetera. One of the members of my board, Dr. Tamara Duperval Brown-Lee, is the chief health officer at Accenture. It's a new job that was created in the pandemic. She's actually a doctor by training and a health equity expert. And she's not the chief medical officer. They have one of those because they have, hundreds of thousands of employees. She's really there to think about health in its broader context. I was just on the phone with someone from Edward Jones who was saying they now have a new wellness center of excellence, again, for their own staff, thinking about this set of issues. So I think more and more people are understanding the connection between those two things.
Well, that makes me happy. That's what you're feeling and sensing, because that's what I hope it becomes more and more. And super hard transition. This made more sense when we were talking about robots and empathy, but whatever, changing it up, which is you will know it since you listen. That's what you said. But in this case, that's what you wrote. And it was, you wrote, no one wants to get stuck in a chatbot doom loop, especially when they are dealing with money issues. And I think that is also a really important point, because I definitely know of myself calling the 1-800 numbers, going like, trying to get to a human. But what's
agent? I mean, what is it when you call the airline and you want to speak to an actual human, and they just keep hitting zero and saying agent, agent, agent.
I know. And so, like, what's even the hack when you're dealing with a chatbot? I guess you would be writing the same thing, or I mean, what? what advice do you have for a bank or credit union or a fintech company that is like playing around with chatbots but does not want to cause this issue for a customer or member?
Yeah. So I wrote that in the context of thinking about the fall from grace that the fintech community has
Yes.
had, both as part of fintech winter, but more recently downstream from Synapse and the failure of that banking as a service program, and all those people waiting months and months to get tens of millions of dollars back. And if there was going to be one incident we could point to that would say that was the end of trust in fintech, that would certainly be it. And I think that for a long time, because fintech was new and cool and we all love technology, that they could get away with um, being less buttoned up
Mm-hmm.
on things like customer service, and I don't mean like they were seeking to do ill on purpose. I just mean they might not have had as robust customer service, as an example. Or they wanted to try cute things like tipping instead of just
Yeah.
charging a fee.
And like forcing
Tipping
someone
is
into it.
not a thing.
Mm-hmm.
I don't know how it became a thing. Tipping is when someone gives you good service. Tipping does not make any sense in the context of a financial product,
No,
as
I
far as
want a
I'm
button
concerned.
that says you tip me for this bad ad. You know?
Right, exactly. And
Uh,
consumers are very confused by it, according to our research. And so I really was calling on fintech to get back to the basics, right? And
mm-hmm.
one of the things is it's not cute to get stuck in a chatbot doom loop. And when you hear people talk about the benefits of why they like fintech, there's a very long list, but then there's a bunch of things they don't like about it, and that's one of them. Now, there's things they don't like about their bank, but there's things that they do like. I know I can walk in that branch if I absolutely need to talk to someone. I can walk in there and get a hold of somebody.
Yeah, and I think that is really significant because you do run into these issues and like the phone number, the computer, the chat. It is not usually when you're in a frustrated moment, you want quick response and like it doesn't ever feel like it's quick enough when you're like really freaked out. But I want to go back to the Synapse thing because yes, that was, I have to say, like hopefully, well, I don't want to predict. It was bad. It is bad. And I'm wondering, but it also feels like it's revealing how hard it would be for a consumer just to know where their money is safe. And I'm wondering if you have any thoughts on like how what's a good way for someone to find out whether hey this is safe or this isn't safe or I don't have an answer to the question. I thought I would because I've studied a lot of like consumer facing fintechs and like things around that, and I've had someone suggest like consumer reports, but I still don't think I'm not aware of a good resource. But are you aware of a good resource for someone who's very confused of how to find a solid fintech app?
Unfortunately, I agree with you that the answer is not quite.
Mm-hmm.
So there's lots of different places to go if you're trying to choose amongst various things, right? Like I'm in the market for a credit card, or I'm in the market for this kind of credit card. Or, I think about the various marketplaces. And you like to think that they've done some level of vetting for who they choose to have on their platform. Now, I don't think that's a guarantee,
Mm-hmm.
right? But um, there, and Consumer Reports does fantastic work, right? But in financial services, it tends to again be a narrow swath of product by product or by company, and there is no seal of approval. What's interesting is that the closest thing we had to that was the FDIC insurance logo, and that's really at the center of the challenge because it turns out that FDIC insurance doesn't really kick in if the institution in the chain that failed is one that's not your bank where the money was
Mm-hmm.
being held.
Mm-hmm.
And so I actually think it's a really interesting challenge that the FDIC and the regulators really need to deal with so that consumers can be making good choices. And it's hard because ultimately the regulators don't regulate these fintechs. Um, the CFPB does in many instances, although not all. And so there's a little bit of a question of whose job is it right now.
Mm-hmm.
And I think this is going to be a very important thing to tackle in 2025, actually.
Yeah, I totally agree, and let's hope that it is tackled because it is very confusing. It is a very confusing experience. And I wanted to talk about also, I saw that your upcoming conference, I think it's in San Diego, but had some mention of like showing people, showing attendees like people with money issues. I think I read that, or showing. Will you just tell me what is the show and
I
tell
will
part
tell
of the?
you.
Yes, thank you.
Yes. So we do a big conference every year called Emerge Financial Health, and it's kind of like the ingathering of the financial health community. It'll
Hmm.
be June 3rd through 5th in 2025 in San Diego. I hope you'll join us.
Would
And
love to.
I'm not even going to get the exact tagline correct.
Hmm.
So sorry to my
Good.
marketing team.
No,
I'll
I'm glad
apologize
that
in
there's two of
advance.
us.
But the key theme is really hearing from consumer voices. It really goes back to where we started the show around
Hmm.
we've got to be centering the person, the customer, the individual. And the only way we can do that is by hearing from them directly. I don't believe that if you had asked someone 20 years ago, they would have said, "Oh yes, invent the iPhone, please, Steve Jobs." Right? I'm not expecting consumers to do our job, but we can't do our job if we don't actually understand their lives, where they're coming from, what they want, how they see the world, how they experience things. And so that's what we're trying to bring forth in June. And I think we'll do that in a variety of different ways.
Well, I'm excited for that. And it does make me have a follow up, which is, banks, credit unions always tend to say, we listen to our customers. Um, but this seems to suggest maybe there's room for improvement or there's room for like broadening one's circle. But am I interpreting that right?
What comes to mind is, that show Undercover Boss, where the
Yes.
CEO goes undercover as a worker in his or her own company.
Hmm.
I see this as the same thing in a way. It's not enough to run a focus group. You got to put yourself in the shoes. You have to experience it as a customer. Like, when's the last time a bank CEO sat down and tried to open a new account, right? In a
Right.
branch. They visit branches all the time and they have their minions behind them and with them. And how many times have they called their own call center um, to see what the experience is like as a user? I think we need more of that. And I think that's true across professions, by the way. I don't think this is unique to banking, but I think it's particularly important.
I agree with you. And this is just quick aside. At Bankrate, one of the things we didn't end up running this, but it was like, oh, we're going to test like how quick it is for me to open an account at a branch versus like online or whatever. And I was like, I'm totally going to win. You're going to be surprised, but I'm going to win. and and I won. And
And
I won because the person trying to apply online had some like flags because of the geography of like her phone or whatever. And I'm like, well,
mm,
yep, you don't know these things until you test them out. And it's very interesting experience, but I felt undercover even though I was going as myself, of course, as I was
totally,
opening an account.
totally.
But
It's, connecting this topic to the empathy issue you raised earlier. For
yeah.
years now, we have run an experience called FinX. And it's kind of like a cross between mystery shopping meets the Great Race. And it's
Hmm.
an empathy building experience. And so we take a group of people, it could be an executive team, or it could be folks across an organization, and we put them in a neighborhood and we give them a persona and we give them a series of financial tasks to complete on their lunch hour, and we send them off, and invariably they come back surprised, frustrated, annoyed, angered. um, their eyes are just completely opened, and these are people who in some cases are the manufacturers or offerers of these products and services. They're the ones who have built them in the first place. Or they, it never ceases to open people's eyes and cause them to think differently. And we all need that. We all, especially in this moment in such a divided country, we have to
Hmm.
be able to walk in someone else's shoes. We really have to find more ways to do that, get out of our own bubbles.
Yeah, I love that. We do have to get out of our own bubbles. And I had just one last question for you, but before I do, any last words of watch out for this or where to find you or, something you're following into next year?
Well, I would encourage you to check us out at finhealthnetwork.org. We do a tremendous amount of research. And if you're ever looking for data on what's going on with consumers and their financial health, that's the place to go. And in 2025, I think I'm really going to be looking for what does financial regulation look like in this next era of governance. I think everyone is likely to agree that it will mean less regulation. And less is not always good. Sometimes it can be, sometimes it can't be. It really depends on the details. And so I'll be really looking closely to see how far the pendulum swings back yet again, because regardless of where one thinks it should be, the swinging like this, that's no way to run a regulatory system for any industry, but particularly for financial services companies, because it creates complete uncertainty, and uncertainty inhibits innovation. So I really hope that we can, wherever we're going to land, that we land there and we kind of stick there for a while.
Well, here's to that. And last question is just, what's the image on your phone's lock screen?
Good question. I have to remind myself. It's a picture of my family.
Aw. And they're from Chicago.
What's yours?
Mine is a photo. My photo is very old, and it's the shadows of myself with my dog walking up Griffith Park. It was one of our first moments where he didn't charge somebody. So it was a proud mother moment.
Oh, very nice. Very nice. Good last question. Jennifer, I'm going to steal that.
Steal that question. And thanks so much for being on the show. It's a pleasure to reconnect with you and talk about these are really heavy issues, but you bring delight to me today in talking about them. So thank you so much for joining us.
I feel the same way about you. Thank you so much for having me. Really appreciate it.
Okay, so one thing I learned in this conversation is that if AI pulls off empathy in financial moments, there are still pros and cons. The good is potentially, no one's judging you in theory. The bad is potentially someone feeling like they trust this thing when it hasn't really earned that trust. And again, so this is a wrap for 2024 for Money Isn't Everything. Thanks so much for being here with me. We'll kick off some new episodes starting in 2025. But until then, catch me with fellow Cornerstone podcast host for Gonzo Banker Awards Live. It's December 18th at 10 a.m. Pacific. Come to find out some of our winners and stay for the banter. See you then.